Hey, good morning, Valerie. Morning, Rongamer. Morning, David. Morning, Arturo. Morning, Michael. How's everybody doing this morning? Um, I do apologize if it looks a little glitchy or weird. I am working off cell phones, two generators, and I don't have all the studio lights on that I normally do. So if anything looks glitchy, it's probably just a lack of lighting. Anyway, um, good morning, everybody. Still about 5% of the area where I am without power. Lots of trees still down from the crazy storm that blew through yesterday. No power at my office, no internet at my house. Hey, it just kind of roll with the punches here. I'm rocking off of a cell phone, and I got two generators here at the office, like I said, and actually three. One, two, three. Yeah. So yeah, that's where I'm at right now. Looks like I can go for 4 hours on the current setup. So maybe I can still do 30 minutes awesome this evening, but we'll see. All right. Anyway, let's talk about what we came to talk about, the market. So first off, let's go pull this over and do this. Right here, we have the Federal Reserve balance sheet for the bank term funding program. That's the closed-end bank term funding program. That's the emergency lending facility that was set up in March. Right here, we set a new high near the end of last week at $106 billion. That's like millions of thousands of dollars that are borrowed. So $106 billion right there that have been borrowed. And it set a new record high. This is not indicating that the banking situation is all clear. This is indicating the banking situation is getting worse. So we did see another failure happen over the weekend, kind of, and it didn't make big headlines, but it did suck a lot of liquidity out of the market, and this thing may come to a head. Be careful, be cautious. This is out there, hanging out there, that it could just be a rug pull one day. If you traded during Lehman Brothers, if you traded during that whole great financial crisis, then you know that whatever the final straw is, it can just come all unraveling. It can go widespread and take it all down. So another thing I was looking at last night was that consumer credit actually ticked down on revolving credit this month or last month, end of July. That means all of a sudden the consumer is not financing further expansion with increasing debt on credit cards. It's a big red flag that a potential recession could be looming. That's usually one of the first signs we see before uh, things really start, sucking down. Now we do occasionally get a reduction in credit card debt here and there, but after 2 or 3 months in a row, that's usually the indication that things are going to get worse. So I'll keep you posted on that one and keep an eye on it. If we continue to reduce the amount of credit card debt that's sitting out there, that means we may be in for another dip in the stock market, another tougher cycle down. Now, speaking of which, let's pull this one up. Everybody remember this chart? We have updated it as of, I guess, Friday. 103 days, 104 yesterday. Today will be 105 days since we've had a 3% pullback in the S&P 500. We're in the 95th percentile up here. Sure, we can go for a new record high up here above 310 or whatever the high is there. Average is 47, median 38. This is the number of days between 3% drawdowns in the S&P 500. That's trading days. We're out here in an outsized move. Now, we can go for, we're in the top 5% of moves ever, bullish moves. Does this feel like a 5% of bullish moves type of situation right now with the market the way it is and the economic news and everything like that? This is one of those things that definitely have my eye on. And, any day now, when we came up, everybody's like, what about the current one? Well, the ES did a 3% pullback. The S&P 500 missed it. Only got to about 2.7, 2.8. So just missed a 3% drawdown, which keeps us on the path. Now, this current drawdown, not quite 3%. All right. Now, If you want to chat with me while I'm live, click the link over there on the subscribe button that's on the opposite corner. I can put my face over here. You're right here. Click that link right there, and a couple seconds later, you can chat on the live stream. If you're new here, give me a shout out. If you're tuning in after I'm no longer live, go ahead and give me a comment. Let me know you tuned in. I'll do my best to respond back to you. And if you want to chat with me during the day, links in the description. Although right now, without power, that's going to be limited today. But I'll be back to normal soon, I'm sure. All right, throw myself back over here. And let's go ahead and talk about the disclaimer real quick. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, and fun. It is not a recommendation to buy or sell anything. Nothing in the description, nothing. Otherwise, no financial instruments. Don't trade if you don't have money to lose. And if you desire personal financial advice on what you need to do, you need to hire and consult a financial advisor. Good morning, everybody. And you know what? My time's valuable, so if you want to hang out with me, that's why links in the description. You can come hang out in Discord, but I'm not telling you to buy it. Just if you want to hang out and talk to more awesome traders that are making tons of money in the market. Anyway, Apple, the title of the day. How low can Apple go? Well, overnight, not really showing much recovery at all. A little bit of green, but not really. 0.28% overnight. Not feeling it. It did have a rather large suck down yesterday, while the market just kind of rallied a little bit. So when we look at it on the daily chart, where does it look like it's going? If you've been around a little while, what major big orange line on this chart does it look like we're coming down into? Look at this confluence right there. Probably coming back to test this area, more than likely around 170 to 175. That's kind of the area right there. How low can she go? Right down in that area. Now, if it holds right there, if it stops, I'm probably going to add my long Apple back. Like I may buy back into Apple. If it starts breaking down below here, the next level down, probably back here around this red box, somewhere back in here. Now, if we run the fib line all the way to the top, right there, that corresponds right there, the 50 and 618 retrace. That would be around the 150 to 160 price range right there. Move this guy up. This would be the ideal retrace right here for getting much higher prices on Apple. Maybe like JT, but how much higher prices? What are you talking about? Like how big can that go? Well, if this is going full bullish, full bull type move, we could see prices right up here around 240, 250, even 260, somewhere right up in there. All right, that's pretty bullish, but we could go down significantly from where we are here around 179, 180-ish. We could see prices down to 150, another 30 bucks down. Be careful, be careful, be careful. All right, I'm not going long Apple until we get to one of these support levels, even if I miss another pop. This is my ideal spot. We may bounce right off of here. All right. Now we also may do this where we go, this was the first move down. We get a 618 retrace off of that. Right like this. Right to there. Right to there. See, through it. You might think I've done this a time or two. And then we get another extension like this. That is entirely possible. And that could take us out into late fall. October, November. You'd be like, no way Apple pulls back that much. Well, for those of you that have been tuning in, I said Apple would come up just shy of 200 and then pull back. Right? I mean, I said it at least a dozen times on videos. And right there it is. Just shy of 200, pulling back. This could be the path. Could just bounce here and go higher. May go a little deeper. This is my ideal target right there. Any questions? Let me know in the chat, on the live stream, or leave me a comment if you got a question about it. And you can ask me in Discord too. All right. I will do my best to get back to you and let you know. Now, S5FI, this is looking pretty good. Pretty good. Bouncing kind of off the roadmap line. The roadmap line doesn't really apply to S5FI, but looks pretty good. We could just come up here and float and go to a new all-time high in the market. You know, this kind of redundant new all-time high. All-time high is the all-time high. It is new if it's an all-time high. So we could go to that new high in the S&P 500. Just come up here and float right below the 80. Maybe like, have we done that before? Yeah, we did back here. We kind of spent quite a while hanging out right here, right around 80. We did it right here. We did it right here. This one was a little choppier. This one was just kind of like grind. And that was in 21. You know, this was in 20, coming out of the COVID low. And then this was in 21. And then we topped out later in the year. You can see we started making lower, and went down. So we could see on this that things were looking less rosy as we got into that top in January. Then volatility picked up, and that's where we are. Now, the actual S&P was rallying a little bit yesterday, probably trying to rip some of those zero-day option traders. There were tons of puts bought on the S&P 500 yesterday. Zero-day options that expired yesterday, tons and almost no calls. So it was super heavy. Everybody was expecting a bigger drop. And what does it do? It rips everybody going short and rallies. Didn't rally big, as we can see on the ES. Yesterday, I was giving you kind of like the range. I gave you that breakout alert right up here above 45.60, and that alert never hit. Now we've made an inside day. We were inside the range of Friday. Came up, bounced off the roadmap line, pushing down. I do expect that lower low. There is a high probability, like 90% chance that we make a lower low either yesterday, which we didn't do, or today, which we are dang close to doing, because we bottomed out on Friday. It's just a market statistic thing. Like 90% of the time when we make the low for at least a week, if not multi-weeks, like we did right back here on Friday. Look at that over here. On Friday, we made that low. It was the lowest low for days and days and days. The market typically does not find a bottom on a Friday. Usually, we will see a lower low either on the Monday or Tuesday, possibly the Wednesday. It's like 90% of the time, Monday or Tuesday, we'll make a lower low than what we saw right here. It's like 90% of the time. I don't know the exact statistic on it, but high probability, like 90, it might even be higher than 90% of the time. So this right here, yesterday, the rally was kind of an opportunity to potentially short that into this low that looks like we may see shortly after the open. Now, lower low just means lower. Like if we tick down quarter point, that's lower. That satisfies the requirement, and we can go ripping higher from here. Be careful. Does not have to go major lower, all right? This looks like it's working on the end here. That looks like a 4-5, 4-5. This can be the end of this move, and we can go ripping out of here. Now, I do still have that resistance, that alert up there at the 45.60 area, which I just moved it around a little bit. That was awesome. Sometimes super helpful. Sometimes I can't even move those things. And then above, let's move this fib down to here. Let's just call that the low for the moment. If we get above 45.80, and then definitely above 46.05, that's kind of confirmation that we're probably going to go out to new highs on this run. A higher high than we saw right back here on July 27th. It does not have to satisfy the 3% down. Now, we could get a dip, satisfy the 3% down on S&P 500, reset the count, and go ripping off. And, you know, as we talked about at the beginning there, or as I talked about, the average 47 days on a run, trading days, 38 is the median. So we reset the count and we can go on a new run. Now you may be saying, JT, where is 3%? Like, what level do we have to hit? Let's clear these off. Pull one on here and do it right there. Right. If we break through, this would be greater than 3% right there. So 44.66-ish. Probably 44.67-ish. So if we get a dip right down to that level, satisfies that 3% pullback, and we can go ripping off. Nope, market's open. All right. Any questions on that one? Everybody clear what we're looking at? So right now we're inside the range. If we break down, we may only get a minor extension. Now looking at the ES Classic roadmap extension, 4480, that would probably put the S&P 500 at that 4466 level. If we get that extension down to that level right there. Also basically hits the 1618 of the last move. Confluence together. So I kind of expect price to come right down in this zone. Kind of. NQ, a little different story. This one, this can also be bottoming, but it also came up short of any kind of target. And I could easily see this going on down to 15.2, if not 15.1. 15,100. Russell over here, we are seeing, let me zoom this up just a bit. Seeing some weakness, seeing dipping on down, and we glanced off of that trend line right there. The move that I would expect is on down somewhere around the roadmap line. If not, getting on down. If we don't hold the roadmap line, we could come all the way down here, retest the lows that we had from back here in October. That would be no bueno. This is kind of like keeping my eye on this one because small caps tend to lead out of recessions, and they can lead into recessions too. So if we're going lower low on Russell while the S&P and the NASDAQ are still rallying, this may be an indication that the market may turn down and go even lower. All right, CL. We've got CL right here. Oh, let me, there we go. CL looks like it's going to come back to the roadmap line right there. Looks like the path. We hit the 1618 extension. I would high probability come back to at least the roadmap line, back to the 100, back to the roadmap line, all that confluence right in there. That's what I expect. I talked about it for, gosh, a couple of weeks before we got up here. Now, expect that pullback. What happens after that, I have to see. We may go even higher. All right. GC. Yeah, the office phone's transferred to my cell phone right now, so sorry about that. Since the power's all out. Anyway, GC looks like it wants to reach down. This is gold. The metal on the futures looks like it wants to reach down to here, although we keep holding that zone right there. Keep on holding it. One little quick down. Be beautiful. All right. Bitcoin. Still hanging out in the range here. We do have this as the indication we're going to break out and run back higher. That level right there, right around 30,300. And if we poke down below the low that we made right here, there's the range. Below 28,650-ish. Probably coming down to the roadmap line at least, and that's around 27.2. If we break out above this, we're probably going up for the next attempt at the high. And we came up short of 32, 32.8, 32.9. So we'll probably run right up there. I mean, we just glanced it, dip, probably come up here, maybe even bust on through. Ethereum, still looking less bullish. If we get below the roadmap line, probably coming down to this area down here. Dollar, rallying back strong. Can it break through the roadmap line, or is it going to poke into it and then reject? I think we'll poke in and reject, but it's not high probability to go higher until we get above, stay above, bounce off, and go higher. Apple, we already talked about. Looks like we're going to get that dip right down to that zone. If you missed it, just pull the slider back to the beginning. Lily, nice pop. Nice pop. Crazy pop. Must be selling the, what do they call it? Majoro? Must be selling the crap out of that stuff. That's sky's the limit right there. Got no ability to predict upside targets right now. Oop. Got a little internet glitch. Anyway, hopefully I'm still live. NVO, nice pop. Looks like that one. Right up to extensions. Probably expect a pullback at least to the 1272, or at least to here, if not 172 right there. MSTR popping on Bitcoin, showing a little positive action. It's not a big pop. It's, 2% up. Hey, morning, Pat. And that can be the correction right there. Right back to the box. Turn up. Where will we go next? Let's delete some lines. MSTR, next target. 505, 544. Right in that zone. Right up here. AMGN, look at that sucker go. That's resistance right up here at 270. If we get above that, probably headed up here to 316. Well, let's pull this down right to there. 320. Got resistance right up in here. If we can break above it, it's go time. This is the first indication right here. Getting above the roadmap line, that's a super aggressive. Above this right now, where we are today, that's aggressive. Above here, more conservative, above 280, looking for that 320 and 350. Yeah, a lot of these are earnings plays. So PKX probably coming back to some sort of zone around this $80 area. Could come back in the 90 area, but that one keeps showing up every day. Big mover. CHGG, Chegg, popping up. Still below the roadmap line. Still bearish. May extend lower. Be careful. Disappointed. Barely disappointed on the top. Beat on the bottom. That's just in line, kind of. It's not a CEO managing their stock price properly. Biotech. Be careful. I'm not even going to mess with that one. USM. Wow. United States Cellular is still continuing to try to break out. Now, if we look back over here, we spent a long time chopping around in this zone, and we have been unable to break out of it so far. Doesn't give me big positive feelings for going even higher. And if we extended that right up to the top of the resistance, that was a head and shoulders, and took a long time, but it played out in spades. I don't see anything ultra positive right now. I would just kind of wait. If you got a hankering to play USM, United States Cellular, then good luck to you. But I'm staying away for now. TLT, that was a deep spot to retrace to. Can we turn up from here? You're sure as blank we can. There are like record call buying. There's record call buying going on. That means we may rip on down and get extensions lower just to rip the people going long TLT. Be careful. That does not have to just blast off at this point. I am long some shares. I did a synthetic back here, expecting a big bounce. It didn't work. I got put shares. Just going to hold on to them. I'm going to sit on them until this thing finally does go. I've got time. I got shares. All right. MDB. Looks like probably on the path to come back to the roadmap line here. A little bit of chop. Could hold support right there at the lows where we've been holding support. Get below that at all. Probably come back to the roadmap line. DDOG. Oh, ouch. Right back below the roadmap line. I think I warned on that. Now, if we break out now, that is a beautiful pattern. The gap fill would be the conservative entry. Aggressive. As soon as we get back above, say, these lows right here, back above this 90, let's say 93, back above 93, you go long. I would watch out for this resistance right here. Definitely has resistance going higher. This is all like echo trade type setups right here. We'd be looking for 127, 127, 138 on the upside. That's your targets right up in there. Now, how long would it take? Could take at least that long. Length in time, which would put us out. Look at that, 1618. That would put us out into late October, November. That's a really nice potential setup there. IFF, whew, International Flowers and Fragrances. How low can she go? She can go way on down. That's out the 1618 may retrace a little bit before we go on more extensions. That's dangerous. That's a dumpster fire chart right there, going down in a blaze of glory. All right, ASML, still expected to come on down to the 655 area at the roadmap line. Snow, probably going to retrace on down. Does have support here and support at 148. Could break out here, but that is choppy and overlapping. Not nearly as awesome a chart as the DOG. AYX, ouch. Ouch, ouch, ouch. Going on down. Is that the clothing company? No, software. Alteryx. Yeah, 28. 23 below that. TMV. Man, potentially breaking out here. Getting a little slam back down. Could come back to the roadmap line. Be careful. Let's see if that was... Yeah, that can turn down and go lower. We have a split coming up here. 4 for 1. I don't know. That's going to reduce the price. It's not a reverse split. That is just a regular old 4 for 1 split. Now, looks like it's on a path to come back to 500 here around the roadmap line. SOXX, I do expect this one to come back down too. That was really extended on that one. SOXL looks a little different, but it is leveraged. And that one could come back to the roadmap line that met the conservative target, and that may be all she wrote. DPST, just chopping around down here. Remember, the banking thing isn't over. This is 3 waves. We may pop right up and hit the roadmap line and turn down even more. That is a giant move. Maybe like, there's no way this goes on down, but watch out. This did a 10 for 1 reverse split. It can head up right on down. 19 would be the extension lower at this point. If we got on up here, it just pushes it on down 13. UPS got a little slam this morning, and that's just chopping. Look, it's inside, and blah, don't chase this thing. That is an unclear, sloppy, nasty, overlapping, smaller and smaller range thing. It's not anywhere like FedEx. FedEx potentially going to break out. UPS, not. All right. FNGU, would not surprise me if this retraces back to the roadmap line. Can it break out? Sure, it can break out. It can reject this head and shoulders. Can it do the head and shoulders pattern right down into the target? You're sure as blank it can. All right. UNH, today there was a lot of stuff going down. UNH just after being crazy moving, just consolidating for like almost 3 weeks now. Got uninteresting. That could precede a pop. Could be storing up energy to make the next move. I've got lots of fib lines on here, so let's do something and clear this up and without removing all my drawings. Now we had a big ABC. That C played out right over here on the lower low. A, B, C, right there. This correction can be done and we can pop out. This so far looks like a 1, 2, 3. This is a 4 consolidation. This will probably take longer than what we saw right here by 2 to 4 times. So we may consolidate, just kind of chop around in pair. As long as we stay above 484, probably going to make a 5th wave higher. That 5th wave higher, probably going to be something like this from wherever the low is. Probably take us up to 540, and then we'll see a 618 retrace like this. Probably come right back down in this zone right here. After we do that, we'll do that likely, and then we can go launch it off even bigger and get that target. So when you see this final pop, this retrace, that's the time to load up right there. I'd set an alert up here around 530, set an alert down here, 480. If we pop up, we retrace, hold that, and pop. That's game on. All right. Game on, game on. Adobe, probably gonna, I give it a higher probability. To me, this is higher probability to retrace this move than it is to break out. Could just prove me wrong and break out, but I think likely to see a move down into this area like right there. Gush. There's oil and gas exploration. Looking like we might turn positive. This is leveraged. Leveraged stuff does not always follow the path, and this is choppy and inside and overlapping and low probability. But we could break out and go. There is a regular 4-for-1 split planned later in August. RNG. Looks like that one's going lower. Extension target to the downside would be somewhere around 21. And last but not least, Baidu. Looks like not following the head and shoulders for now. Watch out for the roadmap line. If it turns up there, we could complete the head and shoulders. If it doesn't turn up there, it may break down and go lower. All right. That's kind of the setup for the day, bias for the day. I'm kind of expecting that spike down. Kind of expecting that lower low. Kind of. That looks like 1, 2, 3. We do a 4 and a 5. Get down there, reverse. So watch out for a lower low and then a strong reversal higher. I'll do the best I can to be online as I can. Like I said, no internet at my house and no power here at the office. So I'll do the best I can to be on for 30 minutes of awesome this evening. Stay up to date in Discord. Stay up to date on the alerts on YouTube. Make sure you're subscribed. Hit the link over there. Throw my face. And hit the link over here in the bottom to subscribe. Hit the bell with the doodads to get notified when I go live. And I'll see you guys later.